Hey guys, Akil Stokes here, and welcome back to another episode of The Trading Edge. If you guys are new, I'm a Forex trader, a trading coach, and one of the co-founders over at tier1trading.com. Now, before we get into today's video, I have a little bit of a rant for you. So if you're someone that just comes because you want a quick trading fix, you should probably just exit right now. If you're someone that just comes to see the trading idea for the week, you can fast forward a little bit. But I want to talk a little bit about mindset, because our goal at Tier 1 Trading is a little bit different than what many people on the outside believe. Many people think we just do trading education, we teach you how to trade, blah, 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 blah. But if you ask any of the members on the platform or anyone that's ever been involved with us, they'll tell you it's much deeper than that. We're looking at personal development, business development as a whole, and trading is just a means to that. And what I mean by that is trading is a skill. Trading is a skill that you can use to really accelerate your wealth, which you can then use to do what you want to do with life, whether that's simply managing your own personal investments, whether that's just gaining supplemental income from trading the markets, or whether it's turning your trading into a business. And I bring that up because today was an interesting situation, right? Typically Fridays are my off days, right? Off days from being active in the platform, but I'm doing a lot of stuff for the business. So we had a meeting with our intern this morning. I'm usually getting some stuff done for Tier 1, and then I bring to you this video. But what happened today was a little bit different. My son's preschool was canceled for the day. I knew my wife had a lot of errands to do, so I said, you know what? I'm going to take the kid, the oldest, and we're going to go see a movie. His first movie, Toy Story 4. Pretty good movie. Almost got me at the end, but I'm a big boy. I toughed through it and kept the tears in. But I made the decision to pass up on what I was supposed to do, the tasks that I had to do in order for family time. And I have no problem doing that. For you guys that have followed me for a while, you know that the most important part of being an entrepreneur, being a business owner, for me is freedom of time. I am in control of my time. I can make whatever decisions I want. My biggest thing is being able to be with my kids and my family as they grow up, and not needing to ask permission to see school plays or recitals or sporting events, or just randomly take my kids to the movie. So I'm fine with that. But we can't put the business aspect aside. And I'm talking to you guys that plan on turning your trading into a business. Because when I got home about 5 o'clock, I had no intentions of doing this video, right? I was tired. I was in a bad mood. I had some bad news from a real estate investment this morning, which had me in a pretty poor mood. And these videos typically take 2-3 hours minimum to produce. And I said, you know what, Akil, I don't have to do these videos. I don't really want to do these videos. I can easily just not do it, and boom, life goes on. But understand this, right? The difference between those who are successful and those who aren't successful is what? What do you guys think? What is the main difference between those who find success and those who don't get success? Because obviously there are people that fall off right away, but a lot of people work hard. A lot of people are doing all the right things, but only a small amount make it above that mountain of success. The difference is action, right? How much action are you going to take? How much energy you're going to invest? How much effort are you going to put into whatever you're doing? And I think about who I'm doing this for, right? When I do these videos, it's for the Tier 1 clients, it's for the YouTube clients, and the clients, the followers, the supporters. You guys are the most important thing, right? We don't have a company without you guys. I know many of you guys are new to Tier 1, but before we started Tier 1 Trading, I worked with a company called Trade Empowered. When I decided to stop working with that company, when Jason Greystone decided to stop working with that company, I would argue that about 95% of the traders that we worked with followed us to Tier 1. That has nothing to do with the quality of content, because Trade Empowered was continuing to teach quality content. The difference was us. We have built that relationship. They know what we stand for. They know what we value. And that's important in every single business, customer loyalty. Another reason from a more business standpoint is that you never know when this could be the big break, right? Maybe a YouTube video doesn't seem like that big of a deal, or a podcast episode doesn't seem like that big of a deal. But what if this is the episode that Joe Smith stumbles upon? He's a struggling trader. YouTube led him to this video, and he's like, man, I like the analysis he did on the Dow Jones. I want to get involved. Well, now he becomes a client. And taking it back to the days when I was doing money management, it was a lot of no's, right? It was a lot of walking in, giving my pitch, hearing no's, right? Getting referrals, calling the referrals. If I'm lucky enough to get a meeting with anyone, I give them my pitch. I typically hear no, right? No, 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 all the time. And I remember there were a few long trips I had to take that I just didn't want to. Now, I did have a potential client in Vegas, which was a cool trip because it's always fun to go out to Vegas, especially when you love to gamble. But I also remember having one in New York. And I remember last minute thinking about not doing it, right? New York's about 3 hours away from me. It's a very expensive trip to go up to. I'm like, man, do I really want to waste my whole day going to New York, giving my pitch and coming back? Do I want to waste the money it takes to get up there just to hear no? I really didn't want to do it. But something in me said, Akil, you know what? Come on, do it. This is what you're supposed to do. Take the right action. Long story short, I came back with a $250,000 in my pocket of money that needed to be managed. And that was really the big start to my money management career. I had a few smaller clients before, but that was the big one that really allowed for me to take my trading and turning into a business. So action is key. That's the moral of today's story. Take action is key, whether it's from a business perspective, whether it's just doing the act of back testing when you don't feel like it, doing the act of trade review when you don't feel like it, any of that stuff. Take action. It is always better than not taking action, and it's typically the difference between those who go on to find success and those who continue to struggle. And again, for you guys watching YouTube, you may be bored, but again, these are the conversations that we're having here at Tier 1 because, as I mentioned before, it's our goal, all of us, to really grow the trader. And the bigger goal, if I kind of spill the beans a little bit, the bigger goal, before it's all said and done, is I would love to provide a platform that bridges everything, right? Right now, we're teaching traders how to trade. We're mentoring them on how to develop and create businesses, but they still have to go out there and do it. And that's not for everyone. Ideally, we would love to get to the point where we can fill everything. We can take a struggling or a new trader in. We can teach them the skill on how to trade. We can walk them through the process of what you need to do to be an elite trader. And then we can filter out those elite traders and put them right into an opportunity where they're managing money and they're able to create a job or a career for themselves based off the skill that they learned. And, hopefully that comes, that will come one day. Not hopefully, I will make it come before I'm all said and done. But that's the goal here. And that's why this message is important. Now, if that wasn't enough, let's get into the charts today. As always, if you're a Tier 1 member, a trial member, or a premium member, you're going to get the full version of this video. Not a lot on my radar today, but it should be about 1, 2, 3, 4, 5, 6, maybe seven pairs to look at. We may take a look at a few indices as well. And then for you guys on YouTube, we're going to pick out one, whichever I feel is the favorite one, and I'll share that with you guys. So no news today. We'll hop right into it. Before we do me a favor, YouTubers, hit that like button, hit that comment button. I mentioned before, you guys are the biggest supporters that I have, and I appreciate it. Please show that appreciation by taking a second to hit the like button, leave a comment, and share this. And I hope you guys enjoyed today's video. All right, so let's get started on the pound dollar. And pardon the junk here. I didn't have time to kind of unclutter my charts, but looking for a bullish opportunity on the pound dollar if we get a certain break. And this is something that we've been watching all week in the live room. Now, overall on the daily, we're still in that position where we have been in a bearish move. We are in a bearish trend continuation setup, but like many pairs that have these big wicks over here, it's a very tricky situation because we don't really know where that reversal point is going to be. We don't really know how far we can shoot lower before the market has had enough. So I'm really looking for alternate moves here, a lot of counter trend moves, minor breaks of structure, in hopes of maybe not catching that ultimate reversal, but catching a little bit of a move in the opposite direction. And if we go down to the 4-hour chart here, one thing that I'm looking for is a break of this level. You can see that price action came down here. I'm actually going to change this color because for no better fact than I'm bored with it. I actually did a podcast the other day with, man, I wish I remember the name off the top of my head. But the guy talked about a really cool trick about how he changes the colors on his chart just to keep the mind fresh, kind of like a pattern interrupt type of deal, which is pretty cool. But you can see that we had a nice, right? A nice consolidation point right here, which ended up breaking to the downside. And what I want to do here is I'm going to look at this level as being a key level on my radar, right? I'm not really interested in any type of short or any type of long per se before this level. But if we can take out this level of structure, which I deem to be important, I think we can push higher, right? I think we can push from above this level, which is right below $1.26, all the way up to about inside level of structure right here, 126.63. It's about 63 pips of potential movement just from this break. Now, I'll have plenty of time to do this later. The first thing that I'm looking for is the break, right? After we, if we get the break, then I could predict the move higher. Then I can set everything up, entry, stops, and targets. But for video purposes, just to give you guys an idea of what's on my radar is, I would start predicting where price is likely to go, not only by looking for structure, but especially if you're newer and you need more confluence, by adding some of the tools that we teach you how to use, one of which being our Fibonacci tools. We can easily take a Fibonacci retracement from our last swing high right up here at 127.84 to our last swing low right here. You can see that price is currently holding at a 382. Again, I'm not interested at this level because we're below this important level of structure. We have a 50% a little bit higher. A 50% isn't really a Fibonacci level, but it is a psychological level. As human beings, we like zeros, 5 zeros, right? 75s, right? Quarters, halves, all that stuff is very easy for us, even thirds, I guess, to a certain extent. All that stuff is easy for us to see. So, subconsciously, we're kind of drawn to it, even if we don't really recognize it. Now, the important level that I'd be looking for is going to be that 618 Fibonacci retracement. This is the golden mean. So out of Fibonacci retracement levels, this is going to be the number one Fibonacci retracement. So that one is going to stand out, and you can see it's a little bit lower than that structure level that I initially identified. Now we can take one more thing as well. We can take our Fibonacci extension tool and measure the move from our swing low right here to our swing high. This is our most recent extension. We may get another one before this, and if we do, we can just always adjust and add on a different fib. But as of right now, this swing low to swing high is our most recent extension. And you can see that we have our 1618 Fibonacci extension, which is just like the 618 retracement, is our most important Fibonacci level. We have that lining up right at the 618. And if we look at our numbers, we have a 126.50 in there as well. I just told you guys the importance of quarters and halves. Here's a level that is slightly below the level in which I identified that we can also shoot for targets at. Now, why this is important is because, this is a method called think like the other trader. A lot of traders are becoming really, really good. They have no problem with entries. I think entries are the least important point. I won't get in a rant about that, but I believe I've discussed it in many videos. But many traders are really good at entries. They're really good at predicting the moves, but they really shortcut the process of targets and stops instead of actually analyzing the market and predicting a valid technical based reason why price should go to a specific level or why price should reverse at a specific level. They're kind of shortcutting and just say, I'm going to just make it 2 times my risk, or I'm going to make my risk a random number, 10 pips, 20 pips. I have no problem with doing something dynamic like the ATR or even trailing, but I'm not a big fan at all of saying, a 10 pip stop. And my question is, well, why 10 pips? And the answer usually is, I don't know, sounds like a good number. Right? Our stops always want to be in a place where we know we're wrong or the market tells us that we're wrong. Our targets, we want to be in a place where we actually project price to go to. So when looking at this situation where initially I would have my targets up here, just based off structure, 126.63, I would easily, after doing some more analysis, adjust them down. Cuts a little bit off of my profit potential, but in my opinion, puts me at a much safer place in the market. So pound dollar next week. Again, if we can get a break and close, a violation of really this 126 level, it's technically a little bit lower, 125.92, but It'd be a lot safer if we had that 126 level. I think that's a good level to shoot for. Real quick, let me just see where an equal measured move comes to. I don't think an AB equals CD is going to be up there, but while we're here, we might as well do it. Do it. Well, look at that, right in that same area, a little bit below it, but an AB equals CD pattern right there as well. So you may even want to adjust a little bit more, but certainly on my radar for next week. Again, first things first, we need that violation. This is predictive analysis, right? We're predictive in our analysis. We're reactive in our execution, right? I'm predicting that if something happens, then this is what I'm looking to do. But I don't want to actually put a position on right now because the market hasn't shown me that we violated that level yet. So I need to wait for that violation, wait for that, I guess that prediction to come true, and then react in the most appropriate way, looking for my reason or waiting for my reason for entry, and then actually putting myself in the trade. So pound dollar, something to watch for. It's a little bit different. Again, it's kind of counter trend because bigger picture, we are in that bearish move. But again, just based on how the conditions have been, which is kind of weird going long the pound with all this Brexit stuff. But based on how the conditions have been as far as the technicals go, this is something that's highly on my radar. So hope you guys enjoyed today's video. I hope you guys have a great weekend. And until next time, plan your trade, trade your plan. See ya.